All of finance will be on chain.
Thank you. Cut. What does that actually look like in practice? Yes.
24/7 markets. Programmability, where like you can program your entire financial product, your security, into like 100 lines of smart contract code, and then sourcing liquidity around the world from like investors everywhere that can just jump on chain and start trading.
Scott Dykstra is the co-founder and CTO of Space and Time. He explains why banks are finally writing smart contracts, why everyone suddenly wants their own stablecoin, and why replacing old financial databases with blockchains is the real unlock. He also breaks down the next big shift in crypto AI agents buying and transacting on-chain.
Crypto never dies. Crypto is a fundamental technology that is going to evolve and shift, and it's only going to grow in use cases and grow in adoption. There'll be a lot of volatility in the pricing of those markets, but it always comes back, and it comes back whirlwind kind of way, that it disrupts everything when it does.
Scott, we are here obviously at ETH Denver, and I think this is maybe your third time back on the show, so welcome back.
Excited to be here. Thanks for having me.
Thanks for coming on. I was not sure if I got your last name correct. Dykstra.
Yeah, Dykstra. It's very Dutch.
You're Dutch.
Yeah.
Okay.
And there's a famous computer scientist that basically invented maps.
Your uncle?
Yeah. I told everyone he was my uncle. No relation at all, but in undergrad, all the professors thought I was like the chosen one. You know, it's like, oh, he's my great uncle.
You should 23andMe that.
Yeah, well, probably. Maybe he is like twice removed or something.
Yeah. It would be good for business.
The Netherlands isn't that big.
Yeah. And you're Dutch?
Yep.
Okay. All right, fine. We've both seen multiple market cycles now. What do you think is kind of like characterizing where we are today in 2026 compared to maybe the 2021 era when things were just like so crazy?
Yeah, from a market cycle standpoint, I think that people have been frustrated with like price action, obviously, and that leads to like tourists leaving and real builders remaining. But I think most importantly, the market's changing. Like 2021 was a craze of NFTs and on-chain games like Axie Infinity, whereas now it's events that are banks, institutions. Like I go to a ETH Denver event and I see a lot of suits. I didn't see that in 2021. I saw crazy dudes with mohawks.
They still have I'm looking over there's a girl with a unicorn on her head and she has a pink wig on. You see that?
Oh yeah.
Yeah, so we still got him here.
Still a remnant.
Yeah, she's not in a suit yet. We haven't got her.
The ghosts of 2021 still haunt us.
Yeah. Do you think like the two can still coexist in the crypto space? Like,
oh yeah.
Yeah.
Yeah, because you still have like I don't think meme coin trading as an example is ever like going away. It's evolving as well. But like there's, use cases where institutions are using stable coins now. Everyone, is building financial rails on chain. Almost every single bank we talk to is writing a smart contract this year.
Yeah.
So it's just the
banks are writing smart contracts.
They're hiring consulting firms to write smart contracts for them.
And what do they want to do with it?
Okay, everything from money markets on chain, pedestrian use cases like CLOs, like collateralized debt obligations, like programmatic finance. Programming stuff that's kind of like monthly slow processes, putting that on chain, but also sourcing new liquidity for portfolios, like money market portfolios and stuff.
Where do you fall in this? Yeah. Where does Space and Time fall in that conversation?
Yeah, we're, as banks work with consulting firms to write smart contracts and deploy them on chain, and usually like at this stage it's mostly new POCs, trying out new things, like digital innovation groups within the banks.
Yeah.
As they write these smart contracts, there's a lot of data that goes in as input.
Okay.
Like using CDPs or CLOs as an example, collateralized loan obligations are these like really slow monthly roll-ups that are basically just a big Excel sheet that's done every month, repriced, and then sold to the market.
Yeah.
All this data that goes in, and we can kind of quantify that using SQL, SQL, and we can provide all the data to their smart contracts. Traditionally off-chain, that would just come from like boring big old bank databases. Now this can come from a chain connected database, if that makes sense.
Yeah.
So we're providing all the input data to all these smart contracts. We're just like kind of wiggling our way into the conversation with like every bank we can. Like, hey, I bet you're writing a smart contract this year, huh?
Yeah.
Need some help?
Yeah, and they need help.
Yeah, and just kind of like positioning ourselves as like external architects to help them.
And they're very receptive to this too now compared to maybe like 2 years ago.
Yeah. I'd say like the sales cycle, or if you want to call it that, the POC cycle is fast now. It's like a few months of prep and then they want to write a contract. Whereas in the past, teams like space and time and adjacent teams. Maybe like Chainlink, for example, would spend like a whole year working with a bank to try to like wiggle their way in.
And it's probably like a domino effect too. Once you work with one of these banks, the others are like, oh, if they did it, we could do it.
Yeah,
Or we
like
should be doing it. Yeah.
There's some story to tell as you work with different POCs.
Yeah.
And I think like everyone's a little hesitant until a few more laws pass, like some more policy passes, like Clarity Act. And so everyone's kind of got like one foot in, like consulting firms that are starting to write some Solidity or some Sorbonne if you're on Stellar as an example.
Yeah. So you're running pilots for these banks, or that's where we're at?
These banks are running their own internal pilots.
Got it.
To create their own stablecoin backed by their own cash reserves, or put their money markets, which are totally antiquated and off-chain, bring them on-chain and program them. Like they have digital innovation groups that are starting their own pilots.
Okay.
And we wiggle our way in and say, oh, hey, as you write your smart contract, we would love to meet with your contract developers and talk about the data inputs and see if we can help you like programmatically add the data that you need. Because generally they don't think that far ahead, right? It's like, okay, hey, we have this antiquated process that rolls up pricing every month. Let's put it on chain and just start writing some Solidity. And they're like, oh my gosh, wait, there's so much data that goes into this. How do we get the data there? All right, well, let's build our own Oracle. It's like, hey, slow down. Like there's already great solutions to help you with that.
And how would you define this data? Like what is that to them?
Well, like the simplest example would just stable coins backed by cash reserves.
Okay, so just literally like that.
Like they have a
data.
portfolio of, call it treasury bills as a dumb example, like just to dumb it down. Like imagine like a big portfolio of treasury bills on a hourly basis, maybe even up to the minute, getting the volume of that cash reserves to a smart contract, almost like proof of reserves, like telling the smart contract, here's how much cash we have and here's how much stable coins we can mint. That's like the simplest entry level kind of like data discussion. And it gets like 10 times more complicated as you like build more complicated markets, like money markets that are like constantly evolving, or like putting like real estate debt on chain. Like they own all this commercial real estate, and they got to price it every month. How much, like what are the inputs of people paying their loans, who's not paying, what's like the value of this portfolio, and sending all that data to a smart contract. So a smart contract can mint new tokens that can then be sold, that can source liquidity. Does that make sense?
Yeah, it's like a whole process or assembly line of things that
it's an assembly line of like grabbing all the data, rolling it all up, and ultimately minting a token that represents that security off chain. Whether that's a basket of real estate loans, a basket of treasury bills that represents a stable coin, you get it.
Yeah. Which area are you seeing the most demand for? Is it the treasury side?
I mean, everyone wants to, it feels like everyone wants to like mint their own stable coin.
Yeah, it does feel like that. I feel like I have a million conversations about that. So I would agree with you on that.
It's kind of like well, they did it, so we need to do it.
Yeah.
And I think that's also the easiest because everyone's got cash reserves.
Yeah.
And like the tech is pretty mature.
Do you think they see the value of all these things, or they're just kind of following the hype and they don't want to be like the only team not doing what everyone else is doing?
I think that's a really valid question. I think you get a little of both.
Yeah.
Because sometimes we talk to teams that are internal at these institutions or banks, and it's kind of clear they don't really know what they're doing, or like it's clear that they're just starting their path.
Yeah.
And they're excited, but they don't really have a game plan. They're kind of figuring out as they go. Whereas others, have a very clear game plan. They know exactly what they're doing to solve a use case internally at the bank, like modernize some very slow, like 2006 era process.
Yeah.
Because you get the benefit of making finance programmable on chain. Like you can program your entire market into like 100 lines of smart contract code, which is badass. You also get the benefit of sourcing more liquidity globally. You can KYC investors and bring accredited investors on chain and source liquidity from them. And then you get the benefit of 24/7 markets, right? Like that's like that's a whole thing that
you see this as like where everything is going. Like all of finance will be on chain in the future.
Yes, but I should probably clarify what that means. 100%.
Yes, please clarify.
100%.
I was being vague.
Vague posting. Ooh, we got a vague poster.
Broad blanket statements. They perform well, Scott.
You need that like TikTok clip. All of finance will be on chain.
Thank you. Cut. Yeah. And an interview, literally. What does that actually look like in practice?
Well, so go
Is
back to those three
everyone-
things I
okay,
just
yes,
said, like
yes.
24/7 markets
Yes.
that are just like running on Saturday.
Yeah.
Programmability, where like you can program your entire financial product, your security, into like 100 lines of smart contract code, badass. And then sourcing liquidity around the world from like investors everywhere that
Yeah.
can just jump on chain and start trading.
Right.
So there's a fourth thing that I think is actually the key reason that all finance will be on chain, which is that today all of finance is just running on fast databases, transactional databases. I'm gonna get Dijkstra era boring right now, like Mr. Esther
like,
Dijkstra,
literally,
my great uncle.
Yeah. He's coming out, yeah.
My great uncle's gonna come out a little bit.
Yeah.
The NASDAQ, like the NYSE,
Yeah.
every bank, Chase Bank, when you walk in and you get some cash, it's all just running on a transactional database, like Oracle, not database Oracle, it's like Oracle, the company, like Larry Ellison,
literally, yeah, okay.
Larry Ellison Oracle.
Yeah.
Like a really fast transactional database that just keeps just a bunch of tables that does accounting, that keeps track of all these financial assets. And that's worked great for 30 years. Before that, it was only mainframes. Now it's mainframes plus databases. And all it's doing is just a table that's a ledger that's keeping a track of your balance at Chase Bank or whoever you bank with, Bank of America. But the problem is like those banks or like those stock issuers or like stock exchanges can easily log into those databases and like change a few things. So when regulators come look, they're not like 100% sure that, you know, for whatever reason, like JP Morgan Chase hasn't like logged in and like changed a few things and maybe manipulated their
Have we seen that happen before?
It happened in, I think it was 2015 with Wells Fargo, and there was a $6 billion DOJ lawsuit, and
Really?
executives went to jail. Yeah, I mean, it's well published. Just Google Wells Fargo oopsies.
Wells Fargo oopsies. Yeah, exactly.
Like there was jail time, you know?
Yeah.
It was a big deal.
Yeah.
But I'm sure it's happening.
So it's a real risk and concern, yes.
And I'm saying there's other things that are happening that are not necessarily nefarious. Like maybe it's just beneficial to the market to like update some prices that are a little late. And maybe there's like a glitch in the software system. So they log into the database, they change a few things. In addition, I think the other side of the market, like the investors that are trading, the folks that own the portfolio, the folks that are putting their money into accounts, want some assurance that like it's backed by real reserves. And so blockchain is just another transactional database, but it's just watched by a bunch of validators across the globe, a bunch of servers across the globe that are all together watching those transactions and ensuring that ledger of your Bank of America bank account hasn't been tampered. Not that they're going to tamper with you specifically, but maybe like in a really fast trading NASDAQ market, there might be incentives to change stock prices, you know, mark some settlement after it occurred a little different, right?
Yeah.
And maybe that's not nefarious. Maybe it's just part of the market. So from a regulator standpoint, from a trader standpoint, from me and my bank account standpoint, there is benefits of taking that transactional database that runs the world markets and just making it a blockchain transactional database. Because a blockchain is just a transactional database across like, you know, a bunch of validators.
Yeah.
Does that make sense?
Yeah. How's the
It's just a
relationship?
better way
Yeah.
to manage trades.
Yeah. I was going to ask, how has the relationship kind of changed on this front? Because do you think they actually fully understand this, or they still find, you know, like blockchains not transparent? Like, do they get the validator argument? Do they get that these things are actually transparent and that because there's so many validators that it's better than the existing systems? Or is it still like a very confusing touch point?
Yeah, that's a really good question. I think it's top down, right? You have like leaders in the fintech space like Stripe that fully get this is a better system.
You guys working with Stripe?
Not right now. We'd love to.
Stripe? No. Yeah. Yes. Come on down. Yeah.
We are working with Circle though, and
Okay.
Circle's one of our partners and investors, and so we're kind of wiggling our way in
What do you
there.
do with Circle?
So it's top down, right? There are leaders in this space like Circle or Stripe that have been like always been the leaders of internet money and like programmable finance. Stripe was like the original programmable finance on the internet, and they understand the tech and they're pushing it. And then I think like banks are downstream of that. I think like banks look at fintech to lead the way, to validate the tech, and then you have like Patrick at Stripe saying, "Hey world, let's replace our centralized, manipulatable, transactional database with this really fast, cool thing called a blockchain. And we can get similar performance, so we can kind of like get the same outcome. and show the banks that this is a better path. And I think it's downstream of that. Like you asked earlier, like, do the banks do they know, like, are they doing this because of the hype, or are they doing it because to solve a use case? I think some of the hype will follow fintech. Fintech will lead the charge. I mean, you're a New York socialite.
Yeah, socialite. Thank you, Scott. That's very kind.
You see all the fintech, you see it kind of leading the charge.
I mean, we hear that a lot of these fintechs want to, again, back to the stablecoin conversation, like bake that into their app so they could just have like a whole kind of like operating system within their app that you don't need to leave, and they could have their own stablecoin and everything else in between. So yeah,
like the neobank concept, like a neobank on your phone kind of thing.
Yeah. You think fintechs first or banks first, like major adoption?
I think fintech already has. Like, I mean, we got like PayPal, Stripe. Who else? It's early morning, so I haven't had my coffee. I'm blanking, but like, there's 3 fintechs building their own blockchains right now.
Yeah, that's true.
It's one thing for, call it, major American bank to write a smart contract as a pilot to try to like create their first little market on chain.
Yeah.
So a whole other thing to build your own blockchain and start sourcing your own liquidity, and seeing the fintechs lead the charge is awesome. Yeah. Like it's all fintech led, I think.
Yeah. Well, I don't know, because like the banks are in it. They're in it too. Yeah. But it's in a different capacity, right? I don't think, is it as forward facing, or is it more like back end stuff for them? Because it's not like JP Morgan's like, come sign up for your crypto wallet on our app, you know? Well, I guess maybe even these fintechs probably won't even do that.
Maybe it's about velocity that they even have the capability of moving. Yeah. Fintechs generally well-paid engineers that are moving incredibly fast, that can get infra up and running, can build a blockchain in a year.
Yeah.
Whereas banks generally have a lot of sometimes regulatory, sometimes policy, sometimes compliance, sometimes just lack of engineers available. Like banks generally move slow for all those reasons. And so the velocity of the fintech will outpace the banks, and the banks will just naturally follow behind for that reason.
Has the clientele for Space and Time changed?
Yeah, for us, a lot. When we first started, we were talking to a lot of like call it first
companies?
East Denver.
Yeah, literally.
That would have been
the unicorns and the pink.
We started and Mohawks
and bring them back. Yeah.
And big animal mascots, heads. Yeah. I won't name a specific animal.
But we won't discriminate the animal costumes on this show yet.
But like we started Space and Time in 2021, so our first East Denver would have been 2022. Yeah. Great vibes. It was before the FTX collapse, and it was all these new participants. Everything was new. A million startups that had just got funded. Yeah. And the vibes were high. So we were doing business development, or we were talking to all these teams that were just started they just needed like blockchain data. They're like, give me an API. I want to look at Ethereum data. Do you have some Ethereum data? Do you have some, Solana data? We need Solana data, right? Yeah. That was 2022. So it's just all these small startups that had just got funded, that just were like eager to build and wanted data from us. And then it kind of morphed into mature DeFi participants, in the bear of, call it 23.
What, like lending platforms?
Yeah. Or like, like the Morphos of the world, or like the Lidos of the world, talking to DeFi marquees, flagship DeFi projects that we're starting to think about being more data driven. Yeah. And Chainlink, who's been very helpful to get us up and going. Chainlink was like our first backer, our first partner. Yeah. They led that charge, like, because they've been deep in the Aves and the compounds of the world, right? Yeah. And then now I think it's shifting much more to institutional, which we've been talking about all morning. Yeah.
What's the split, the percentage split, you'd say?
Well, I would say my time right now is 50-50, but in terms of like opportunity, and like, I would say 70% banks in terms of like where we see the market going, because the DeFi marquees, if I can call them that, are, they don't have as much off-chain data to input to smart contracts. They're not
Why is
writing...
that important for people who may not understand what that means?
Okay, so like Uniswap or Aave are just a closed loop. There's no connection to the outside world. It's really just a smart contract. Money comes in, money goes out. Lenders lend, borrowers borrow. There's no like off-chain Larry Ellison Oracle that's like providing money. That's like providing like treasury bill portfolio values, I'm not saying that Uniswap v4 is simple. I'm saying it's completely on-chain. It's just smart contracts.
Yeah.
Whereas if a financial institution like a fintech like Stripe or a bank like Major American Bank wants to create a new market with their own securities that are already trading off-chain in traditional security markets, like collateralized real estate obligations, like loans to real estate, that's a bunch of off-chain portfolio data that needs to come on-chain and be minted as a token. You're tokenizing RWAs. That's all I'm really talking about.
Yeah.
Because, and so for those that are familiar with RWAs, right, it's just taking off-chain portfolios of traditional securities or traditional assets and just tokenizing them and selling them to a broader 24/7 market, right? So that connection between the off-chain portfolio and a smart contract, we help with. So that's a huge opportunity for us. We've been building ZK zero knowledge proof technology to make that more secure for 6 years now.
Yeah. What would you say is the biggest value add for tokenization that we don't really get in public markets today? Like if they do become 24/7, is that enabled through this technology, or is that something they could do without using this technology? Because I know that's a big argument. And then you brought up the liquidity side where it's like, okay, global access to markets. So I think those are two big points, right?
Yeah, like I'll admit there's nothing stopping like the New York Stock Exchange from trading on Saturday. It's not like
they did say something like that.
yeah,
I think it was
they're getting the
24 like 6 or
they're getting
like
the meme coin,
2036.
the meme coin fever. They're like, we gotta trade it. We want to trade on Sunday.
Get them in. Yeah.
There's nothing technical. You're right. There's nothing technologically stopping them from doing that. But it's the systems that were built and have been in place for 30 years that are set up for Friday 4:30 p.m. market closure, like those have to be rewritten. And if they're gonna rewrite those systems, we might as well then listen to like Patrick from Stripe and be like, okay, maybe we could also swap out the traditional transactional centralized manipulatable database that powers these markets, replace that with a blockchain.
Yeah. What would you say would change first in the grand scheme, thinking about the pilots that you guys have been working on, but then also like just kind of the evolution of the space? Is it kind of like the customer facing products will change first, or internal banks, or just like, I guess, the fintech apps like we talked about? Like, I feel like there's
I was on a
different
panel
chunks.
yesterday where like it was a quantum panel. It was a bunch of quantum nerds, irrelevant to the conversation, just back. And it's like this question was asked, which is kind of a similar question you're asking, which is how does this change for the consumer? Like, does my Chase Bank app change if there's a blockchain backing it? How does the consumer or like the average person feel this? And the short answer is they kind of don't. They don't on like a day-to-day basis. I mean, yes, like soon it'll be connect your wallet to your name your bank app. Like the neobank concept will change, and that you'll have stable coins as an option, or you'll be able to use your bank account to buy Bitcoin, like, or, you know, like your 401k to invest in Bitcoin rather than like S&P 500 ETFs, right? But outside of that, outside of like connecting your wallet to your neobank app or doing some work with stable coins to pay your friend in, you know, Latin America, for example, I don't think the consumer really feels this. I think the regulators feel it, like for compliance. I think the folks that are moving large amounts of money, call them whales, feel it because they have more confidence that the database backing their tens of millions of dollars is like not going to be manipulated. But I don't think like the average person suddenly, like, you know, if banks start building smart contracts on chain, I don't think like the average consumer really sees that outside of like stable coins in their Chase app.
Yeah.
Fair?
We didn't even talk about like yields bearing stable coins and all that. There's a lot of conversation around that right now, depending on when this airs, like within the next week or two, ideally. We see the conversation in, you know, DC around market structure and stable coins and whether or not they should be able to offer yields. This isn't a regulatory show, but with that in mind, like, what is your take on alternatives to this yield option?
I'm really glad you brought this up because this is like called a pitch of ours, or like something we're
oh
really,
no, the shilling. No, I get it. I get it.
No, for real. This is an area that we're aggressively pursuing and like trying to explain to the world, hey, space and time has a real solution here. So let me explain. Let's use Coinbase as an example, because Coinbase led the charge with USDC yield. Like I deposit my USDC, I get like 4% on Coinbase or something right now. It's constantly changing. there is a little bit of unclarity
Yeah.
in the Clarity Act about how the government is going to allow institutions to give incentives to depositors. And for regulated entities or traditional entities, or like we'll call them exchanges, where it's not 100% clear yet whether they'll be able to do that, and if so, how. Whereas on chain, you can do this in a much more trustless, decentralized, kind of like skirt the boundaries of the regulatory policy, and you can use space and time as a way to just say, okay, wallet XYZ has deposited into a protocol on chain this much USDC or USDT or you name it, and for how long, and we can give them rewards on chain that are just backed by data in a fully kind of trustless way, fully decentralized way on chain, just programmed through smart contracts. Like it's almost like claiming an airdrop. Like you deposit some USDC into a protocol, a few months later, you claim your incentive or your reward. And that claim process will be a query to space and time, a question asked to space and time, how much did you deposit? And it's not as simple as just like a one time, like you might deposit $5 today, $10 tomorrow, withdrawal $6 on Thursday, and so on and so forth. So we can track all that data.
Yeah.
And so it's a way to kind of do on-chain in a trustless, fully decentralized way what the exchanges are kind of figuring out whether they can or can't do based on policy that's about to be enacted or not enacted.
So this is like usable right now for decentralized protocols and stuff?
Exactly.
Yeah.
It's just a decentralized Coinbase USDC deposit incentive.
And it's being
Maybe there's an
done.
acronym there. Like
Yeah.
decentralized.
Let's shorten that. Yeah. We'll get that. We'll get marketing work on that.
Marketing might help.
Yeah. It's live, right? This? Okay.
Yeah, it's just a solution. It's just something that anybody can use with a few lines of solidity. A few lines of solidity, you call space and time, we give you back the data you need.
Okay. Where do you kind of see space and time sitting long term? Is it kind of like financial infrastructure, a data layer, or something else entirely?
It's a great question. And I think my answer earlier is probably the answer I'll continue with, which is 50% DeFi marquees, like DeFi projects as they move to version 3 or version 4, version 5, adding more data. That comes from us. That, and then the other half is institutions that want to write smart contracts to bring traditional, really slow, really antiquated, not I'll call them non-programmed processes on chain. Because both require data.
Yeah.
Like you think about like Aave as a lending protocol. Aave doesn't know anything about your wallet when you go borrow. It's not like the Aave smart contracts like, this wallet has already paid off 2 loans. She's been liquidated once.
Wait,
All right,
really?
well,
That's so shocking that it doesn't know. Is it ZK proofs though? Is what, like,
ZK proofs
so I could just
will
borrow
solve
and
this
borrow
problem.
and borrow and it'll
There's
still
no history, right? So
Yeah.
what's shocking, this was shocking to me in, call it 2020, when I
Yeah.
first got into crypto, is that every single DeFi protocol has no idea. The wallet has no history.
Yeah.
There's no ability for Aave to say, you've already paid off 2 loans. Great, we'll give you a better borrow rate. We trust you a little more as a borrower.
Yeah.
Or, hey, you've already been lending with us for years. Thank you for your loyalty. Here's like a loyalty. Here's a better lending supply rate because you're a loyal customer.
Yeah.
Like these things that are so common in banks, just because they can run a Larry Ellison Oracle database query.
Yes.
Like Aave can't. There's no database on chain until space and
Interesting.
time came about. So something
Yeah.
as simple as giving you a better borrow rate because you're a loyal borrower or you paid off loans in the past doesn't exist today. Some folks like that are purists would say that's a feature of DeFi. I would say that's a bug of DeFi. Like I want to write a DeFi protocol that knows the wallets that it's interacting with, even just from like a loyalty standpoint or like a updating parameters. Like,
And you think that'll be fixed in the coming years?
well, space and time has a solution to solve that. The question is
Yeah.
whether
They'll take it.
DeFi protocols care enough to adopt that. Because you still have a lot of purists that are like, well, I'd rather have it fully anonymous. Like, I don't want to know that this wallet's already borrowed.
I don't want to know whether or
like,
not they could borrow. Yeah.
But you
or
can
if
still
they
remain
borrow,
anonymous.
yeah.
Like, it doesn't have to be tied to your name. It's still just a wallet. It's still just an anonymous address on the blockchain.
Yeah.
But I'd love to know the history of that wallet when it interacts with my DeFi protocol.
Yeah.
Fair?
I agree.
Yeah.
I agree. Is Aave receptive to it?
And so I would say that, the banks are really important too in our strategy. We're working on it.
Wow.
It's
I
all
love it.
process,
What
right?
a
Like
nice
it's
answer.
kind of,
Yeah.
I keep saying like we're wiggling
Yeah.
our way into both
And it's different.
DeFi marquees and
Yeah.
wiggling our way into institutions, you know.
Okay, fair enough.
And that's really the work that we're doing in this kind of changing market. Like, you know, off podcast, you asked me, Scott, what are you working on? Like, what's new, my man? You know, and
My man.
you didn't use those exact words.
I said, what are you excited about? Yes.
Yeah.
Yes. Honestly, that was one of the last questions I was going to ask you anyway. So we could ask it on record is like, what else are you watching right now that we didn't discuss that you think others should pay attention to? Or it could be, you know, tied back to this, but.
Interesting. Yeah. I'm not prepared for that question. I have to think for like half a second, but outside of, all these institutions coming on chain and, you know, flagship DeFi getting more data driven and starting to know who you are as a wallet, you know, I'd say like right now there's a very shifting landscape of what crypto is about. Like in 2024 it was all memes. Like I couldn't wake up and get on Twitter and not just see anything but meme coins. Like, you know, fart dog went to 2 billion today. Like, oh, great.
Yeah.
Whereas today, I think that has given the industry kind of a bad reputation, but
Yes.
simultaneously a good reputation is coming from like all these teams that are recognizing that AI agents are going to be transacting with this money too. Like I keep saying, we just talked for 20, 30 minutes and I kept saying, hey, the fintech recognizes that the blockchain is just a better transactional database to manage money and manage trades. AI agents also recognize that. So maybe the very tip of the spear won't even be fintechs like Stripe. It'll actually be OpenClaw transacting with stablecoins, like giving your agent or your bot some capital on chain and letting it interact with other bots or procure services. Like there's this brand spanking new technology technology trend coming out around agents buying their own services, like buying data, buying APIs, buying cloud compute for themselves, like my agent buying its own GPUs to like run its own inference. I don't know. It's just it's like you're gonna start seeing this all over Twitter soon. Yeah, it's like the next frontier of like agents buying stuff for themselves. It's not like buying you a flight.
I have heard that. Yeah. Oh well, no, actually, I've heard like giving them your credit cards, and I've had a few people at this conference tell me like, yeah, I actually give my agents like all of my bank account information. They buy stuff for me now too. But you're saying they buy stuff for themselves.
That's like the very edge of the frontier. Like, I'd say like we all understand the concept of like your agent booking you a flight. Sure. I'm saying like your agent needs to spin up its own compute for whatever reason, or it needs to buy some data from a stock market to make some stock market decisions. Like if you're really hands off and you're like, hey, trading bot, find me the best, S&P 500 trade, it might need to buy data.
Yeah.
And like procure that. And I think some of that will be stablecoin driven. And shouts out to like Coinbase for like their pushing of X402, which is just like a standard by which agents can buy things with crypto on chain or buy things with crypto on the internet. So you asked me what I'm excited about. I'm excited about agents being the tip of the spear for another use case for crypto on the internet.
Space and Time involved in this process with the AI agents?
We've been doing a ton. Like we've been working on AI agent use cases like all the way back in like 2023. Microsoft's M12 was one of our backers, and they pushed us heavy toward like AI agents early on. So we did a ton of work, and we built what we call Dream Space, which is like an AI agent driven vibe coding studio for crypto apps for smart contracts. Call it like Lovable for smart contracts. Yeah. So we're heavily involved. Yeah. But I mean, the market's moving so fast; it's exciting.
What's the ultimate unlock here then? Or one that we haven't seen yet? Once these agents are
I think that's it. I think we just need, like, everyone's like, says blockchain needs more use cases. Crypto needs more use cases. Well, this is a tip of the spear use case of like agents actually transacting and procuring services via, for example, stablecoins. Yeah. Blockchain needs more than meme coin chaining. We need a little more than like programmable money markets from your bank. We need like an AI agent use case, and this is one I'm really excited about.
Okay. Yeah. Cool. Amazing. Last thing, Scott, can you leave us with a piece of advice?
Wow, piece of advice for builders or for
just the listeners?
For the listeners.
Well, you know, we're at East Denver. You can make it builder oriented.
No, I got one for builders and for listeners in general.
Right, good.
Listeners in general, crypto never dies, and you might hear in the deepest part of a bear market all kinds of pessimism. Crypto is a fundamental technology that is going to evolve and shift, and it's only going to grow in use cases and grow in like adoption.
Yeah.
And there'll be there'll be a lot of volatility in the pricing of those markets, but it always comes back, and it comes back in a whirlwind kind of way, in a way it comes back so fast and so violently that it disrupts everything when it does. For builders, I would say the tech's pretty mature now. This infrastructure teams like Space and Time have now had 5-6 years to really, really get their thing correct, to really mature their products. And infrastructure like Chainlink's extremely mature. Chainlink just came out with CRE, which is like a more mature wrapping up of all their services. We've now packaged together our prover to make it really easy, like a few lines of Solidity, and you can now ask questions for stablecoin rewards. So don't go build stuff yourself. Like years ago, everyone had to build everything themselves from scratch. And I think with like vibe coding, people want to build everything from scratch. Like, oh, I want to just build it all myself. I'll just vibe code it. I'll just build it. But you can vibe code on top of like great infrastructure that's already built, ready to go, and very mature. That's where we're at now, like a maturity in the industry.
That's good advice. We haven't gotten that before. Thank you. All right. Well, Scott, thank you again for coming on. It's good to see you.
Yeah, thanks for having me on. It's great to see you again for like the third time. It's awesome.
Yeah, amazing. Thanks.